heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
Ed Ludlow here in San Francisco. This is Bloomberg Technology.
Coming up this hour, the AI hypercycle. It's helping TSMC, the company reporting better than expected sales on that boom in artificial intelligence applications demand. But can it support the second half? We break down the numbers.
Plus, the fate of Microsoft's $69 billion takeover of Activision Blizzard. It's in the hands of a judge, but it was merger arbitrage specialists glued to the court in San Francisco, some even paying line sitters to snag a seat at high-stakes hearing. We have the story.
And Meta's newest social app, Threads, topping 100 million users in less than 5 days. Can this hype cycle hold? But first, let's check in on these markets because, look, we are actually not seeing much hype if you're looking at the broader indices today. We seem to see the tech sector just selling off a little bit. Look, we had 3 days of losses over the course of the previous trading week when we saw the S&P 500, and really some of the mood music was looking a bit better in Europe, for example, and indeed in China. Look at that, up more than a percentage point when you're looking at the Nasdaq Golden Dragon. But it's interesting that that was more on perhaps support for the Chinese economy. Going back to the Nasdaq 100, what's interesting about this one, Ed, is the fact that we're likely to see rebalancing come July the 14th. The strength of the Magnificent Seven has been so out toward that they're going to have to do a special rebalancing. 55% of the weighting of this index is made up by those Super 7 stocks, the likes of Microsoft and Amazon. Of course, perhaps we were seeing some weakness across these names, and I know you're going to dig into, but off by 0.4%. I'm looking at the 2-year yield. That's off by some 7 basis points. Interesting as we wait and brace for another big macro week. This week, it's all about CPI, it's about Fed speak, and we'll see how strong this US economy is still looking. Moving on, and actually we're seeing a big nothing burger really in the world of crypto at the moment. We're up about 0.4%. Still 30,000 level is where we hold at the moment. But really in the US dollar area, that is all looking at CPI. And it means that perhaps for now, crypto just a little bit treading water, it would seem. But dig into some of those micro moves.
Yeah, the one name we're watching closely is Rivian, up 3% in the session, had been 6% higher, 9th straight day of gains, a record for this company. Trading at $25 a share. Remember, that's a far cry from the $172 and a cent that it hit post-IPO November 2021. But I wrote in the Hyperdrive newsletter this morning, it's kind of turned a corner, and the story is building around Rivian. We will continue to track it. Meta now softer by 0.6%. We will dig into that Evercore note about $8 billion of revenue from Threads. By 2025, we'll bring you those details, but not doing much to support the stock. And you talked about the weighting situation. Actually, most names on the Nasdaq 100 are in the green, but Microsoft and Amazon, 2 names to the downside, both off by 2.6%. From a points perspective, they are real drags on the index overall, which is why broadly in the technology sector, we are in the red. One name that we're tracking closely, TSMC, the contract chip manufacturer. I'm looking at the US ADRs, the US listed shares of this Taiwanese company, off 0.3%. Sales down 10% year on year, but still in above street expectations. The drop not as wide as analysts were expecting. This is a story, Caroline, about AI, which is why we like it.
Why we like it. We're going to stick on exactly that. TSMC. Let's bring in our in-house expert, none other than Bloomberg's Ian King, another Brit to add to the mix today. And Ian, is it because we've seen the stock already outperform so much that we're seeing a little bit of weakness, or is it more that we're worried about the second half?
I mean, it's a mixture of both there. I mean, the way to look at this performance is really, well, it's not as bad as people thought it might be. I mean, there are no runaway expectations of things getting better here. It's just like, well, they kind of did better in a way that we may have expected, and things really for the majority of their business, which is really the smartphone industry, just still don't look that good.
If we simplify the story, TSMC is a contract manufacturer. It makes chips for others who design them. The story, smartphone PC bad, AI good, basically.
Yeah, no, that's absolutely it. I mean, around 40% of their sales are from the smartphone industry, and that's an industry that's going to be down roughly 10% this year. So not brilliant at all, and that obviously has wider implications. On the other side, high-performance computing, which is PCs, but also the data center, And as we've seen, if you've got people like NVIDIA giving you orders for very expensive chips, and that's a good place to be.
Yeah, it is. And for many, the worries, the constraints have been on the supply side. How much is that TSMC's concern?
Right now, not so much anymore. I mean, I think everybody would like to see, a lot more volume. What we're seeing in terms of this better than expected performance is really a value story, right? You know, you're looking at a smartphone chip which is $34 a go compared to some of NVIDIA's chips which are in the thousands. Obviously, if you're selling chips that cost the thousands, then your margins are really good and that helps your revenue. But really, you want those factories full as well, and that's going to get your gross margins up.
We've been talking a lot about an AI hype cycle. And Caroline, this is interesting. Behind the scenes, Ian has been teaching me things, which sometimes goes well, sometimes doesn't. H100, A100, these are high-power GPUs. Yep. Very specific use case to the training and inference side of large language models. But you still need the memory chips.
Correct.
Why? Explain why being on the same board, GPU, CPU, yep, DRAM is important.
Well, it's all about data sets, right? The bigger the data set, the more parameters, the more information, the better your calculations are, the better you can train it, and the better your inference is down the line. What do you need to handle those large data sets? Better storage and bigger lumps of memory that sit next to those processors. So in theory, Micron, Samsung, Hynix, all of those other companies should be benefiting from this. Unfortunately, smartphones, PCs, not great.
Bloomberg's Ian King, Mr. Chip, we call him. Thank you very much. Now, coming up, what the fate of the Microsoft-Activision deal in the video game space has in store for that industry at large. We're going to discuss all that with Convoy Ventures' Josh Chapman, a VC whose singular focus is the video games industry. Speaking of, take a look at shares of both Microsoft and Activision. We expect imminently the judge to decide an outcome in the FTC hearing or trial for a temporary block on that deal. Activision up 0.5 percentage point, a soft proxy for the direction of travel of where investors see this going. But as we've discussed, Microsoft down 2.6%, really big points drag on the Nasdaq 100. This is Bloomberg Technology. The Microsoft-Activision deal is the biggest video gaming and tech deal ever, and it's pretty important for the arbitrage community too. Portfolio managers, analysts, and specialized brokers who bet on whether mergers will go through flew in from all over the country to sit in on the hearing over Microsoft's takeover deal here in San Francisco. Bloomberg's Marty Nayak is here for more. So you've spent days and days in that courtroom.
It was a 5-day hearing, yes.
Alongside some suited and booted individuals. Who are they and why they're there?
So, I was interested to see some line sitters, and then I noticed that they made way for folks in suits and formal clothes, and they really stood out in San Francisco. So I was wondering, who they were, and it turns out that they were merger arbitragers and analysts, who were there to just see what was going on, and they were taking notes, feverishly and keeping a very close eye on all the little grimaces and sort of the body language of the judge.
New Yorkers, be busted. Don't go to the SF in your suit. Malthi, what's interesting is, of course, they're trying to discern any frowns, any facial movements, and basically how this court case is going. From your writing, it seems that perhaps not to, the FTC's advantage.
It definitely seems like from the last round of questioning by the judge on the last day, she really grilled the FTC and asked for a lot of evidence that wasn't really produced in court. So it definitely seems like right now the companies have the upper hand, but you never know with judges. Some of them, they may ask a lot of questions in court, but they won't go very far in terms of taking drastic steps like blocking a deal. So we'll have to see how it all plays out. But definitely the sentiment now is among the arbitrage community even that perhaps the companies right now, things are looking good for them.
So there are some things we need to consider about outcomes and scenarios. If this goes in Microsoft and Activision's favor, there is a deadline on the deal. We've got to think about that. The UK has a completely separate regulatory process going. Bring us up to speed on what might happen next.
So we have this July 18th deadline that's looming, and the companies have to move quickly to close the deal. So everyone is waiting for this ruling to come down from the judge that will sort of be the first round in the fight with the FTC, which is trying to temporarily block its block the deal right now. So also, UK regulators have said that this deal won't, have said that this deal can't go through. So we have Microsoft, which has appealed that decision. We'll have to see what happens in terms of how they plan to close the deal around that. There could be a scenario where they just decide to go ahead and close the deal, but keep both the entities separate for a while. Perhaps they could do that globally or only in the UK. So we'll have to see how that works out in terms of how they work around the UK decision and sort of the appeals process around that.
July 18th, clock is ticking. Malti Nayak, thank you so much for bringing us, the legal expertise, what's happening in the courtroom. Let's look at how it affects the ecosystem. We're pleased to welcome Josh Chapman, managing partner at Convoy. It's a Denver-based VC firm investing in all things gaming. Josh, great to have you back on. And does this affect the ecosystem if it doesn't go through?
It does affect the ecosystem. So right now, there's about $45 billion that's sitting in cash on the gaming corporates. And then secondarily, there's about $175 billion that's sitting on the balance sheets of tech companies that have gaming divisions, such as Meta or Microsoft. So this ruling certainly does have quite an impact on what's going to happen next around vertical integration and M&A in the gaming industry.
And of course, Ed, the argument, for example, in the UK, has been about the cloud element to gaming in particular.
Yeah, and what's so interesting is when I had Bobby Kotick on the show a few weeks ago, he said this isn't anything to do with cloud. It's a tiny market. We're not there yet. We write time and again, Josh, in our Bloomberg News stories that this deal will reshape the landscape for video games as an industry. Does it?
In part, it doesn't reshape it in the sense of sort of upending the entire console market. If anything, this is a continuation of very competitive and healthy competitive markets, right? I personally am on the side of I don't believe that this acquisition is anti-competitive. And so from a cloud gaming perspective, Microsoft actually is the perfect cloud infrastructure platform to build an entirely new market. In addition to not only cloud gaming seeing more competition, you also see the rise of more competition in the mobile market, the Xbox Game Pass mobile store that they want to launch. So this adds a ton of competition already to the industry. And so certainly, they could actually be responsible for creating an entire cloud gaming market.
When you think about some of the compromises, offering Call of Duty on other platforms as an example, what kind of disruption does that give to the industry? Because it changes how players have historically accessed those games. There's a lot of loyalty, right? You're either PlayStation, Xbox, you're a PC gamer. Does that mess things up a bit?
I don't think it messes it up. If anything, I think it actually keeps the playing field across gaming, specifically with Call of Duty, which is really the #1 topic right now. Right now, Call of Duty is played by about 1 million people on PlayStation. So from an economic incentive perspective, Xbox has no economic incentive to remove that game from Sony. And so Sony wants Call of Duty to succeed, and so does Microsoft, and definitely, obviously, Activision Blizzard. So when it comes to what's next, I think that you could see the rise of cloud gaming being a sort of more affordable way for people to game, which would be great for people who don't want to buy, and invest $500 to $1,500 into an Xbox or a latest PlayStation. So I think this is a net win for the consumer. I think over time, you're going to see increasingly more cross-platform games like Fortnite, like Call of Duty. And I think that will continue, and gaming is going to thrive under the approval of this acquisition.
Okay, Josh, if it doesn't get approved, how does that change your own investment thesis? Do you hold back in terms of writing checks at the moment?
We wouldn't hold back. So we focus on seed Series A investing, writing $1 to $5 million checks primarily into technologies, platforms, and infrastructure of the gaming industry. So we will continue investing at early stage, which is proving to be quite vibrant right now. But from a M&A landscape for our companies, once they get to later stages, that is actually where this could have an impact. Are vertical integrations and mergers and acquisitions going to be approved? And I think, as I mentioned earlier, with some of the cash that's out there waiting to acquire great companies, they might be more hesitant because of regulatory concerns versus pure, economic deal making.
Josh, this is the first opportunity I've had to ask you about Apple Vision Pro and gaming. What do you make of it?
I think we're a long way off from the vision that we saw pitched. I think that it is very cool. This is going to be great for very solo experiences, but I view this as sort of one of the, just like the first Oculus that came out, if you remember that, Ed, everyone was very excited about it, but true adoption didn't happen until 5, 6, 8 years later. So I think that the augmented reality world is coming and will absolutely be here. We actually got excited about one of the other announcements they made, where they are actually launching a gaming operating system to turn their PC industry with the Mac into a gaming platform. That actually kind of went under the radar, but was one of the most exciting things we were watching, is that they're opening up the ability to run high-performing games on top of Macs. That will be much more impactful. I think in 4, 5, 6 years, the Vision Pro will enter certainly a more affordable price entry point for the consumer. But like many things, this is about wow now and then later see mass adoption.
Josh Chapman, managing partner at Convoy, also talking all things Activision, Microsoft, and we are expecting any day now the judge to make a decision in that FTC pause request. Now, coming up, states are tightening up their privacy laws to better protect kids under 18 and how businesses treat consumer health data. That's next. Caro, what you got?
Oh, it's interesting, isn't it? Amazon itself looking at health, looking at AI, but let's just focus on Amazon, what it's got in store for the next couple of days. It is Prime Day, and look, great reporting coming from Bloomberg, the terminal, saying, look, Prime Day just isn't the catalyst that it used to be. Previously, when it first launched, we used to see a run-up in the shares in the week towards it. Now we see usually a fade in the last 4 years at least. We're currently off by more than 2%. This is Bloomberg.
Time for Talking Tech. First up, Ant and Alibaba are paying the price for Jack Ma's clash with the Chinese government. On Friday, Beijing announced a nearly $1 billion fine for Ant Group, but it signaled an end to a regulatory crackdown. Now, Jack Ma's Alibaba and Ant Group have collectively lost $850 billion in value since 2020, with Alibaba's market value off by about $620 billion from its peak, according to data compiled by Bloomberg. And Foxconn has determined it will not move forward on a semiconductor joint venture with India's Vedanta. Foxconn said the company aims at exploring more diverse development opportunities and that the company is working to remove the Foxconn name from what is now a fully owned entity of Vedanta. Plus, Amazon's annual Prime Day isn't as popular as it used to be. In the past 4 years, the stock's actually fallen in the week of the two-day sale as investors' focus has shifted to AWS, its cloud computing business. One to watch. Caro.
It is. And let's stick on how Amazon is clearly a company that's been embracing the world of AI, like everything, but also more slowly been trying to embrace healthcare offerings too. We want to talk about that intersect a little bit more, particularly as we recently saw in Connecticut, consumers getting more control over how businesses treat information about their health and data, particularly for those aged under 18. Lawmakers added the new requirements, for example, to the Connecticut Data Privacy Act, which took effect July the 1st. Joining us now about that intersect of AI and healthcare is an expert in the field, Punit Soni, Suki AI founder and CEO. You're really trying to basically give advantages to clinicians in particular, AI helping streamline their tasks. How much has data and privacy been one that you've had to navigate?
Significant. I mean, to be honest, the biggest public health crisis in this country that few people talk about is the fact that clinicians are burning out. I would say 88% of all clinicians, by some recent study, don't recommend their own profession to their kids anymore. For every hour of clinical work you do, you spend 2 hours doing administrative work. So it's super important to actually figure out how to use AI in healthcare. And the first place where you will start is probably in automating clinician workflows. If you're going to do that, then privacy, data, how do you actually retain it and take care of it becomes paramount.
We are learning on Bloomberg Technology, and we have been for a year now, that when you're building a large language model or foundation model, the quality and volume of data is key. So how do you reconcile the need for privacy with the need for massive volumes of data to develop next generation technology?
First of all, it's actually important to actually talk about what AI really is. The truth is here, even a dog walking app has AI these days, and so It's a little bit of a hype cycle that's going on. AI is a very broad term, and it goes all the way from speech technologies, speech transcription technologies, understanding your commands, so intent extractors. Large language models is just the next generation of language model work that's happened in AI. You can actually make a big dent in clinical workflows by using all of these in some variety of fashions. The truth is that the data in healthcare is very discrete and very specific, and so therefore you don't need tremendously large bodies of knowledge of data to be able to create tech that actually works in this space.
Caroline, I think we have so many founders on this show, so many venture capitalists, and we do talk broadly about AI. But to be fair, we also find VCs that are very specifically focused on where they're putting money, thematically or in a narrow field.
So, right, think about the applications in the legal field. We think about your applications in the healthcare field, Punit. And to that end, have you been taking a lot more calls from people wanting to put money to work in your own company? I know you raised funds, it's a significant round, back in 2021, but have you been looking at adding on in this particular realm?
Yeah, I mean, the right time, that will actually become very important. And, as you scale the company, you have to do that. I think the primary question to ask is, what problem are you really trying to solve? First and foremost, we want to make sure that clinicians don't have to really focus on these screens and typing and checking boxes when they're actually talking to the patient. I mean, imagine a world when you walk in and you just ask, Suki, which is kind of like a Siri for doctors, hey, what's my day like? And it tells you, here's the next few patients you're coming in. So give me a summary of the next patient. Show me the chest X-ray. Summarize the findings for me. And then, hey, let's just edit it a little bit and push it into the underlying system of record.
Well, quickly, the idea is that Suki does not replace human doctors, but it is an assistant, an aid.
Yes.
Mechanically, how does that work?
Well, I mean, imagine having something that's always with you everywhere you go. And when you walk into an exam room, you ask it to give a summary of the patient. When you are talking to the patient, what about you ask Suki to pay attention? And it will take the doctor-patient encounter and create a clinical note out of it. What if you edit it, add some orders, and then you say, Suki, just submit that to the system of record? That is an assistant for the doctor. And I think that is the future of where healthcare tech is going to be going.
Suki AI founder and CEO Punit Soni. Caroline, this is a topic on the show that we are going to continue talking about, health in artificial intelligence. Coming up on today's Bloomberg Technology, artificial intelligence gets a big push in the UK. We speak with the CEO of Quantexa on them making a big investment in the field. Before we go to break, let's check out AMD. Shares kind of been chopping around early in the session. We're down 1.4%. The news flow, not much there, but AMD was reinstated with an accumulate call at Phillips Sex. Price target $125 a share. From SF, New York, this is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, and let's get you a quick update on the public markets right now, halfway through the trading day. And look, a little bit more caution here in the United States, particularly in big tech. Look, the Nasdaq more broadly is a benchmark off by some 0.3%. We've got, well, a very healthy jobs data that was clear from last week. Now we look ahead to what the CPI print, the inflation data, is going to show us, and the Federal Reserve speak ahead of them going silent before they make the latest rate hike decision, as many are bracing for. I'm looking at the MSCI All Country World Index, though. Interestingly, Europe managed to pick itself up after a few days of sell-off. The macro data really out there showing that Europe could do with a little bit more purchasing power on the least on the day. We're seeing that the Golden Dragon Index in China showing that actually there was a little bit of a lift in Asia trading. Chinese stocks on the higher side, at least those traded in the tech world here in the United States, up 1.2%. As we understand, the Chinese government in particular is going to be showing some support to its property sector, but the all-encompassing meaning is that maybe the Chinese economy gets a little bit of a boost. I'm looking at the individual movers. Microsoft on the downside. Look, the NASDAQ 100 is under scrutiny because the Magnificent Seven, of which Microsoft is one of them, and indeed so is Amazon, look, it's got two heavier weightings toward them. The outperformance of those 7 stocks means that maybe we get a rebalancing coming July the 14th. What does that mean for how these stocks are traded in the ETFs, the QQQ, for example? We're currently trading down by Amazon. We look ahead to, of course, that all-important Prime Day tomorrow kickoff. And Rivian, I do this for you, Ed, because I know that you've been all over this stock after that exclusive conversation last week. Up now 9 straight days, potentially, a record run.
That is a good stock to watch. Thank you. Now, global data analytics software maker Quantexa set to invest $250 million into new AI research over the next 3 years. The firm helps to uncover hidden risks and opportunities for financial services businesses. Joining us now is Quantexa CEO Vishal Maria from London. Vishal, is this a case of invest in AI or get left behind?
Great question, Ed, and thanks for having me on. I think there's a couple of points here. So first and foremost, AI and machine learning has been in the DNA of Quantexa since we started it in 2016. On the way we unify data, contextualize data, and support those insights for our clients to make better trusted decisions, machine learning and AI has been through the platform end to end. The investments we're doing today and what we've announced this morning is to catapult further investment in all things AI and machine learning to better serve some of the more harder applications when it comes down to regulated markets.
You are based in London, of course, but also here in New York, Boston, Toronto, Malaga, you name it, you're across Europe in particular. Vishal, where do you allocate some of this money, this investment? Is it London or elsewhere?
Great question, Caroline. So we are HQ'd here in the UK, and as you correctly state, we're in 20 plus cities worldwide, and you mentioned a few. And from the engineering perspective, our heart of our engineering is done here in the UK. If that's data engineers, data scientists working with the core platform, verticalizing those applications in areas like data management, customer or patient 360, areas like KYC and AML, many of those applications are built here in the UK, working closely with many of our strategic clients. And those clients, as you said, are globally. So if they're in the US with large banks such as Bank of New York Mellon, or insurance companies like Allianz Group in Germany, these are major clients of Quantexa that we work very closely with, based here in the UK.
I mean, Ed, we sit here as three Brits, but it's notable that the UK has had a rich history with AI. We know that DeepMind, of course, really built there, and it's something that the UK is trying to show off, particularly with the US visit.
There's a history of research in the UK, but also President Biden, on his visit to UK, I'm told that the Prime Minister brought up this kind of cooperation, Vishal, between the US and UK. What's your assessment of that cooperative work in the field of AI?
So I think the field of AI, it is an ecosystem coming together when it's to do with academia, when it's to do with regulation or government, but also the enterprise. And obviously, as tech providers like Quantexa, working in a broader ecosystem is critical for the success of AI. But one thing I would also add, Ed and Caroline, to your point of the visit today, obviously AI regulations and AI standards is really important to put in play, because one thing that's critical here is AI is here to stay. You know, I studied AI 20 plus years ago. This is not necessarily a new technology. It's a technology which is at the forefront today. It's in prime time today. But ensuring that is treated carefully in a trusted and transparent fashion is really critical. And if that's any regulation or any standard or any collaboration between governments as a key topic, I think it's only important for organizations to be doing that.
But Vishal, I do go back to the point Caroline made about your global footprint. When you listen to President Biden and you listen to Prime Minister Sunak, who is more convincing in the leadership of driving AI forward? Where do you want to put your money and find your talent, the UK or the United States?
Great question, Ed. And I think from a talent perspective, we must always put our customers, our clients at the center to everything we do. When I started Quantexa in 2016, it was with that sole mission to ensure that we put our clients, if those are large banks, government organizations, insurers, or healthcare organizations, putting them at the center to our innovation is critical. So working closely with our clients, working closely with academia is obviously a critical part to any CEO strategy who is running a tech company. And we've obviously done incredibly well, both here in the UK, as well as in the US and other countries, in recruiting some of the best talent. You know, we work very closely with a number of universities to ensure we're working with some of the hardest problems with those universities and looking at the talent from that perspective too.
Vishal, what's interesting, of course, when you're in the intersection of finance and AI and tech, you're going to be very used to trying to navigate regulation when it comes to financial institutions. what about regulation of AI? I mean, I'm looking at the EU, you're in Ireland, you're in Amsterdam, Brussels, and clearly they're trying to act quickly on an AI Act.
Yeah, no, absolutely. So coming back to my earlier point, Caroline, so everything we have done here at Quantexa from an AI and machine learning perspective is fully transparent, fully scalable, and most importantly, within our platform, we've adopted a white box set of algorithms that are very clear to explain to any regulator, to any model risk management department in a bank on how you stitch that data, but more importantly, why did you come to an outcome to say this person's of interest or this party is not of interest. And that is at the common to most of the regulations globally. The transparency, the explainability, and the ethical use of such data.
When are you going to make a return on your big investment in AI?
So just like with many investments, it's backed by a business case, and this investment is completely follows that path. Now, we obviously just closed our Series E at the beginning of April, where we raised just over 130 million at a valuation of 1.8 billion, led by GIC. Now, as part of that investment, there is an investment case on where we deploy our funds, but we will take a long-term strategic view on this, and so are my investors. As I mentioned, AI is not just here today and gone tomorrow. AI is here and has been here before, and it will stay here continually. But it's very important that organizations like Quantexa take a much more long-term view when it comes down to investments. And what I'm delighted, my clients, my partners, as well as my investors are all on that journey with us to ensure we're making that impact in the market.
Michelle, Maria, great to have some time with you. Quantexa there, based over in London. Meanwhile, coming up, look, we're going to be taking the pulse of the crypto VC industry. Remember when we only used to talk about crypto? Now it's all talking about AI. Where's the intersection in that? PitchBook crypto analyst going to be with us, of course. Robert Lay. Ed, what are you watching?
Yeah, Snowflake. I'm looking at shares of Snowflake down 1.6%. Another name kind of at the intersection of cloud, enterprise, and AI. Not a lot in the news flow, but I would note that Frank Slootman, CEO and chairman, did put a regulatory filing in Friday night to exercise options and some insider selling going on in that name. So that could be one of the factors impacting the stock to the downside. We keep looking. This is Bloomberg Technology. Global VC funding into crypto in the second quarter of 2023 was the lowest amount since 2020. Meanwhile, AI is the green shoot every single VC here on Bloomberg Technology is talking about. Let's bring in Bloomberg's Hannah Miller, who's been going over the data. This is data from PitchBook largely. What does it tell us?
Yeah, so we've seen a continued steep decline in crypto venture funding, especially compared to last year. So it's the worst quarter since 2020. We had thought maybe it had bottomed out, that funding would pop back up. That has not happened. So I think VCs are looking for a way to reignite interest in the crypto industry, and founders are scrambling to get funding when they can.
Okay, Hannah. So where's the legit intersection of AI and crypto?
It's hard to tell because it's so nascent. You have people arguing that crypto and blockchain can bring more decentralization to AI, which is really dominated by a few companies right now. But the companies that are building an intersection of crypto and AI are still very nascent. They're still working on stuff. They haven't released anything yet. So it's kind of hard to tell whether this will carry through and whether crypto and AI can go hand in hand.
I want to show the data just for the United States focused on AI, because when we consider global investments, the US and what we're seeing on our screen now, $31 billion year to date, is most of global spend.
Yeah, so with AI, people are interested in investing in it, that there are these deals that are happening in the space. There was a slight decline quarter over quarter, but overall, things are happening here in the space.
Hannah, you talk about how the startups themselves are pivoting, trying to sort of show their prowess in the intersection of AI and crypto. But what about the dedicated funds to crypto investing, the VCs? How are they allocating at the moment? Because a lot of them have a lot of overhang from money lost in previous rounds, I would have thought.
Yeah, so a lot of these crypto venture funds, they have mandates that require them to back the space. So they're obviously still going to be deploying capital. And they're looking for ways, to spend their money wisely. And some of them are being drawn to this intersection of crypto and AI. And looking at companies like Tools for Humanity, which developed WorldCoin, as well as Jensen, which is developing a decentralized marketplace based on blockchain for compute power.
WorldCoin. If in doubt, back Sam Altman, it seems to be the takeaway. Hannah Miller, thank you very much indeed. Really great to have a perspective to build up to what is now an integral conversation with PitchBook's crypto analyst, Robert Lay, who I'm pleased to say is right here in New York. And Robert, we were hearing there about what a dire quarter it was for crypto VC and for crypto allocations. Does any of it look better going into Q3, do you think?
Honestly, we think it will look better. Like Hannah just mentioned, a lot of these crypto VC funds, they have to deploy capital into space. Part of the slowdown is that the diligence cycles just slowed down. So you look at in 2021 and 2022, some of those deals were happening in a 1 week or 2 week time frame. And that's,
i.e. not much due diligence.
Exactly, right? And so now investors are taking the time, meeting the teams, meeting the founders, understanding the business model, understanding the product market fit, and then they're going to deploy capital. What we're looking at and talking about those crypto venture funds, last year alone, there's $25 billion raised for crypto native funds. That capital has to be deployed over the next 2 to 4 years. So investors have some time because they just raised those fresh funds in 2022. But we think that as investors start to get comfortable with the different business models, the different opportunities in the crypto space, they're going to start deploying more. And then our outlook at the beginning of the year is that we're going to see an uptick in the second half of 2023, and it's going to bottom up around sometime in the summer, and we're seeing that right now.
It's so interesting to compare and contrast what's happening right now in AI and what happened in crypto. Ashton Kutcher was on Bloomberg Technology a few weeks ago saying he raised his $232 million fund in just 5 weeks. And we're basically talking about crypto so broadly, just like we talk about AI broadly. Are there any bright spots, specific areas in the underlying technology or marketplaces where there is still activity for crypto?
Yeah, there are a few areas that investors are still really excited about and deploying capital in right now. And it's really 3 broad categories. Infrastructure, so you're looking at the underlying blockchains and the scaling solutions to make the blockchains faster and having higher throughput. The service providers, so you think about a lot of institutional, traditional financial institutions are still moving into the crypto space. We just heard about BlackRock and Fidelity refiling for the Bitcoin spot ETF. So there's a lot of institutional interest. So what are the technologies and software and services you can provide to help institutions move into this space? Custodians is one type of technology, or prime brokerage or trading services, anything that can help them better facilitate their entrance into the space and providing service to their customers. And the last area is what we call, and we just wrote research on this space, it's called decentralized physical infrastructure networks. I know it's a really long term, we call it DPIN, and it's any kind of real world infrastructure that can facilitate tokens to be able to provide services. You can think about decentralized servers, mobile networks. So decentralized servers, Hannah just mentioned Jensen, they do a decentralized computing for training AI models. That's just an example, and they can use tokens to have anyone that has a computer can help facilitate and contribute power and compute to that network.
Kind of like an AI version of Filecoin.
Exactly, that's exactly what they're doing.
I'm interested in where these things are getting built, because crypto is decentralized, it's also global, and there was a bit of sort of regulatory arbitrage going on at one point. Is that still happening? Are some of the founders moving off, going out of the US?
Honestly, that is the narrative. We just don't see that happening. We think that the talent largely is still here in the US. A lot of the founders are still building here, and they're recruiting talent here in the U.S. A lot of folks talk about the strict regulations that's happening right now with, the SEC, CFTC, the Fed all coming after crypto. Yeah. That, I think, is not going to push founders to move abroad. And I'll give you a quick example. We know in Europe, typically their regulations are a lot more progressive. We know even with fintech, you look at PSD2 and open banking that happened a few years ago, a lot of folks said that fintech innovation is going to move to Europe. We never saw that happen. Still, a lot of the fintech innovations happening here in the US, and we expect the same for crypto.
There we have it, Ed. So all our talk of the founders leaving not happening, but things can move so quickly, right?
Yeah, I guess the question I have, Robert, is when's the rebound for crypto come? What moves the needle?
Yeah, it's going to be mostly the funding, okay? Because startups right now, they need funding to grow and scale. So at what point will investors get comfortable? And our call still holds is that it's going to be sometime towards the end of this year. So as what investors are looking at, what projects are building the strongest products out there? And what are their underlying business models and how are they getting product market fit? And then the ones that are going to get that are going to get the funding. And we're going to expect to see that towards the end of this year. So, you know, the rebound's hard to say, but we're hoping sometime next year, early 2025, you're going to start seeing a lot more capital and a lot more founders coming into the space to build.
PitchBook crypto analyst Robert Lay with the backward-looking data, but also the forward-looking forecast. Thank you very much. Now, coming up here on Bloomberg Technology, as more alternatives to Twitter come about, Threads could be the rising star among them. But is it too early to tell how large or profitable the Meta app will be? More on that next. Caro, what you got?
Well, the shares of the parent company. Let's look at Meta, because actually just basically trading flat on the day. It is one of the Magnificent Seven. We know that there might be a rebalancing afoot July the 14th coming for the NASDAQ 100. Maybe that's put a little bit of pressure on the stock after what was a good rally last week as people anticipated and then saw a pretty successful onboarding in terms of 100 million already on that Threads app. We're going to discuss it next. This is Bloomberg. Time now for going viral. It still is. 100 million people are saying it's Threads that's going viral. There has been much hype over Meta's newly launched social media app that has, of course, Twitter on pretty high alert. Analysts over at Evercore ISI estimate that Threads could actually near 200 million daily active users and generate about $8 billion in revenue by 2025. Now, look, $8 billion per year for the next couple of years, Ed. That is but a drop in the ocean of the 150 billion in revenue that Meta as a parent company brings in. But look, it's more than Twitter was making.
But how do we reconcile that it will ever make money? Because if you think about it, Justin Lau, producer, just asked us, when does it become Twitter? The early engagements I've had on Threads is everyone saying, we like that there's no ads. We like that it's just text. Simple platform.
I'm sure, but we all said that about all of the previous, and then we slowly but surely realised that that is the quid pro quo. You use it, you, of course, have to pay for it in some way. It can't just be free. But I think what's more for a stumbling block for me is the decentralised element of it. We know that it's not part of the Fediverse quite here yet, but eventually it will be. And what does that mean for putting advertising within, well, the use on its own servers and the like? And what does it mean when it becomes more distributed?
And Elon Musk has kind of leaned into that in his jabs on Twitter over the weekend, some of which he directed at Mark Zuckerberg. The complaint that I hear and people thread me about is also discoverability. How do you find communities and groups that you want to share a conversation with? But it's a simple platform, and I love that we're already talking about how much money is this going to make? Well, according to Evercore, $8 billion by 2025. Nice.
I mean, that is what financial journalists do. It all comes back to the money, isn't it? But to that point, it's also still a baby. They kind of probably slightly rushed it coming to the fore because they were capitalizing on a kind of difficult moment for Twitter. They will start to have hashtags, I'm sure. Who knows when they have a competitor to Spaces and we can go cross-platform on that one too.
It's just a baby. I won't do the voice, but it's growing fast. 100 million users in a week. What can you say?
Helps when they're just easily porting over from Instagram. Meanwhile, that does it for this edition of Bloomberg Technology. Ed, look, John Felton, he's going to be joining Amazon SVP Worldwide Operation, going to be talking Amazon's shopping extravaganza. It's Prime Day. You don't want to miss that conversation.
Yeah, and if you missed any of today or you want to recap, don't forget about the podcast. There's a lot going on in every show, from AI to what's happening in hardware and video games. So the podcast on Apple, Spotify, iHeart, and of course on our Bloomberg platforms. We have a massive week in the world of technology coming up. From here in San Francisco and out in New York with Caroline, this is Bloomberg Technology.